You own a business and you're producing profits and you're thinking, man, I'm paying way too much in taxes. How can I reduce my taxable income? Well, I'm gonna tell you right now today that the most powerful way to do that is actually through real estate investing. Taking profits, putting them into real estate and getting maximum tax benefits. And today I'm gonna show you exactly how to do it.
'Cause we're gonna be legends. What we're doing here ain't just scary. It's about to be legendary.
So I'm here joined with Frank today. Dude, Frank, how are you doing?
Doing well, thank you.
Good. So Frank and I, we're recent friends as of the last few months. I've enjoyed your entire family getting in the game of real estate investing.
Thank you.
And one of Frank's accelerants right now is, Chris, I want to actually have my business produce more money, more profits, and I want to funnel that into real estate. Good idea, bad idea? We're really here to find that out today. So first of all, Frank, how do we know each other?
Well, I mean, fortunately, my son Cole came to one of your events probably about a year ago now, was totally enthralled by it, wanted to be a part of it, so he came to work with you, fortunately, and he's introduced me and several members of my family to you, and we've all become partners.
And they've all been moving forward now, buying real estate.
Yep.
And you've got the active business going on. And today's question is really centered on making a business profitable. What do you do to reduce your tax burden? And I want to share with you a couple of really specific ideas on that.
Perfect, that's what I need.
The first one is that a lot of people don't know this about real estate. Let's say that you go and buy 5 homes. Okay. And let's say that at the end of the day, those 5 homes lose you $20,000. Would you be excited?
If it was an actual loss of cash, not very.
No, but it's not an actual loss of
Right.
cash, right?
Right.
You might actually make $15,000 or $20,000,
Right.
but based on IRS accounting, you can make $20,000 of cash and show $20,000 of loss.
That's exciting.
It is super exciting,
That's
right?
exciting.
Because it's like, wait a second, if I keep buying more real estate, then I'll produce enough tax breaks that I can really keep shrinking my taxable income.
Absolutely, that's the plan.
If you show $20,000 loss in real estate when you made 20 grand, then that transfers over to your business and your personal life. Now it's like, wait a second, I was gonna show that I made $80,000. Well, that $20,000 write-off now takes that down by $20,000. It's gonna lower your tax bracket and lower the amount of taxes. So the percentage is gonna shrink and the amount is gonna shrink even more.
Yep.
If you're making $200,000 a year, then for you, if you're paying 40% in taxes, we're talking about $8 grand that you're now not giving to the government that you get to keep.
Get to keep.
And I don't know about you, but keeping $8,000 puts a smile on my face,
That
right?
does, absolutely.
So people sometimes want to know, wow, Chris, how much real estate should I buy? And my answer is, you should buy as much real estate as it takes to eliminate your taxes. Or at least somewhere thereabouts, right?
Absolutely.
So you clearly understand that principle.
Yeah.
And so now it's about, I need my business to produce enough money to pay for my bills. And then whatever I have left over, I want to pay myself to invest with, so I can then actually reduce my taxable income. This is now, as a business owner, what I call a retirement account. Because if you work for someone else, maybe you can build a 401k. But dude, when you're in business for yourself, Frank, who's building your 401k?
And just me.
It's just you.
Yep.
You are your retirement plan.
I'm the only one.
Which is exciting and scary.
Right.
Scary if you're not doing anything,
Right.
and thrilling if you're actually going above and beyond.
If you have a plan, you betcha.
You know, so one of my businesses, it is just a cash cow. I strip all that money out, I dump it into real estate, and that real estate produces my tax shelters. And then I actually get my retirement plan. I get the cash flow from the deal, so I'm still getting paid, but then I also shrink my taxes.
That's exactly what I need.
So that's what happens when you pair real estate to business.
That's exactly what I need to know.
So what do you think is gonna happen this next year? What are your hopes for your business?
Again, I'm just getting started. I've had some really successful conversations. Got a couple real good contracts. So by the end of this year, I really feel in my heart that I'm going to have some pretty good cash flow I've got to do something with.
Good.
I'll be able to cover my nut, cover my living expenses, and then have some that I've got to do something with.
That's awesome, Frank. I'm so excited for you.
Me too, actually.
Listen, for those of you that are watching this and wondering, well, I'm a business owner, I've got profits, or I simply pay too much in taxes. Maybe you work for somebody else. If you pay too much in taxes, you don't have to be a business owner to get this benefit. A lot of people, Frank, they're putting money in a 401k, they're putting money in an IRA, they're trying to get their house paid off, and I think those are stupid things to do. I know that sounds really bold, but it's like, I'm putting enough money in those things that I can't accumulate enough to actually have the retirement that I want.
And I think most people do that just because they don't have another option. They're not aware of what opportunities are out there.
Yeah, but if you were to take that and put that into real estate and get significantly more growth, actually get paid a cash flow and reduce your tax basis, friends, that's what I call a triple win. It's
That's
a
a
win-win-win.
No-brainer.
Well, most of the stock market stuff is really producing single-digit ROI. And Rule of 72 shows that you're not going to double your money on that kind of stuff for
A long time.
15, 20, 25 years. So it's like, wait a second, I only got 40 working years. What do you want? I'm only going to double my money twice? Right. And it's like, well, I can get real estate to double every 3, 4, 5 years. And so you need something that will accelerate that. So it's not just that real estate will actually decrease your taxes. Real estate also increases your income, and it also increases your overall appreciation. Since 1963, according to the U.S. Census Bureau, real estate has increased in value year over year an average of 4.5%. Wow. And what that means is, 4.5% doesn't sound like a lot, but 4.5% over 5 years that compounds to 30%. So you own a $100,000 property, now it's $130,000. You own a $300,000 property, it's now $430,000. So real estate, just because it goes up with time, while giving the tax benefit, plus getting paid on money I don't have to pay tax on, that's really the whole genius behind it. So whether you're self-employed or whether you work for somebody else, the strategy most definitely works.
Yeah, I need this. I need this information, and so does everyone else, really.
Yeah. Well, Frank, thank you so much for being here today.
Appreciate it. Thank you.
And for those of you that are thinking, man, this was really good information, make sure you subscribe. Ring the bell. Every day I've got a video coming out to help you become the financial genius that you should be in life so that you can live the life of your dreams. For those of you that want to know more about those tax benefits, click the link below. You get a chance to talk to my team and say, all right, this is how much I'm paying in taxes. I want to pay a lot less. How do I do that? They're going to show you. Good job, buddy. Thank you for being here.
You're a master at this.
I have been.
How many videos?
Well, I think